Well, we are in a snowy and chilly Davos. The temperature out here is low, but the temperature around India and probably deal making must be very high. And that's why the top brass at Jefferies with us right here. Aashish, Agarwal, Mahesh, Nandurkar need no introduction. Gentlemen, thanks for taking the time out and being with us. Can I start with you, Aashish, a recap of how 2023 turned out to be as a year for risk assets, for deal making, India interest, and what does 2024 hold in store?
Sure. Thanks, Niraj. It's been a great year, I think, for us as Jefferies, for India as a whole. We've seen record deal making in 2023. It was a great market from an IPO perspective, from a secondary deal market perspective. We at Jefferies India have been extremely enthused about India opportunities and have been part of really some marquee transactions over the last 12 to 24 months. Getting great response from investors. I think investors are looking at India in a fresh light with continued outperformance. I think the only sore point was the aggregate FII inflows in India in 2023 were way lower than what one would have thought. But as a house, we believe they can double in 2024 as more and more investors start looking at India opportunity in the secondary market as well as on the primary side. We are expecting, I think, a few themes to continue to stay robust as a house. Real estate is seeing strong pickup. Power is seeing some strong pickup. I think not the traditional areas, but new areas will start garnering a lot more inflows and a lot more interest from the investors.
Double, in 2024?
Yes, I think that's what we will start by saying, and hopefully we can build on it. And last year was all about domestic savings, and that will continue. But FII flows, especially given this is the time of allocations, India looks shining, political stability has improved, the outlook has improved, and with that, maybe a few investors will prepone their allocation, whereas they would have maybe waited for the second half of this year. But that can change given what has happened over the last 2-3 months or so.
Mahesh, how are you reading into some of these things?
No, I completely agree with what Aashish has said. I'll just put that $20 billion number into the context, because last year we saw foreign inflow about $20 billion. It's actually not a very large number. We used to see $20 billion in 2010, 12, 13, 14, etc. And since then, India's market size has gone up 3x or 4x. Also, the assets under management globally have gone up 3x, 4x. So what we have received as a in the context of those numbers is actually very small. So I'll actually not be surprised if it doesn't double, but maybe even goes more than that. And I know I'm making a big statement here, but yeah, it's what I feel. But yeah, I clearly believe that markets are something that never move in one direction. So there will be some ups and downs for sure. But if you look at the longer term structural story, and especially we believe that after a gap of nearly a decade, we are seeing all the three aspects of capex cycle firing in at the same time, which is the government sort of capex focus or the policy focus on the capex side, the real estate, and also the broader industrial capacity additions. And I think that is going to lay a strong foundation for GDP growth over the next decade or so. So yeah, clearly believe that there could be some market corrections for sure, but those corrections should be bought into.
Okay, I'll probably just add on to that. I think historically in our engagement, one of the strongest pushback on India has been the depth of markets, the liquidity, and the size and scale. I think one of the things that has changed significantly is the number of companies that cross the threshold of $1 billion, $5 billion, $10 billion has doubled. And liquidity has improved significantly. Jefferies India has been involved in number of deals which have ranged from $500 million to as much as $2 billion in a single stock, 15% of a company to 50% of a company. And that shows the depth of the market. And I think that's what will bring in more flows, because people have the visibility to be able to deploy large ticket sizes in India. Unlike a few years back where, to deploy $1 billion plus in a single stock was limited to very, very few numbers.
Yeah, no, that's okay, so that's an important point as well. I would love to for both of you to dwell upon what is it that you are hearing thus far out here at the WEF, and what are the kind of conversations that are lined up, because companies that we spoke to yesterday, global corporations, are all talking about increased interest in India. Make in India, make in India for the world. Service companies talking about how difficult it is to ignore India from an R&D setup perspective or an employee perspective as well. So what is the kind of conversations that you have had thus far, and what is it that you anticipate for the rest of the WEF?
Maybe I'll start off and Mahesh can add. I think the themes that we have picked up over the last 2 days, definitely AI has become a big thing, and Indian companies are here in reasonable representation, pioneering that theme. From there is a large contingent from government as well, and clearly you are seeing trends like the government is trying to get more investment, and trying to ask investors how can we make it easier. So the awareness of India has been there. I think we are now putting in blocks to solve for issues that are some bottlenecks at the margin. So talent to tech, I think, is one of the themes that we are clearly picking up on the AI side. More investment in India, a lot more representation from the states. I think those are things which will facilitate investments, not just in capital market, but in real assets, in infrastructure, and beyond, and so forth.
Yeah, just to add on, we are clearly seeing strong government presence here. We have 3 Government of India lounges. We have the CII lounge. In fact, we have 5 different state governments also having their own lounges. And just to build on to what Aashish mentioned, what we are seeing is the government officials are clearly trying to understand the bottlenecks, if any. It's not just the chest thumping. There's a clear and honest exercise to understand the key investor concern. We ourselves have been instrumental in getting a lot of large investors, be it private place or public place, multi-asset, etc. And we've been organizing interactions for them with senior government officials. And I can clearly see a very meaningful dialogue going on. I think this can actually further improve the ease of not just doing business, but ease of investing in India as well. I think which will probably be a big factor going forward.
Okay. One last question, and that is around what kind of promise does a policy continuous India bring to global investors? Now, I'd love to understand what are people talking about from that front, because 40 to 50 countries going for elections in 2024, presumably very few have the predictability of policy, at least in the large nations that India would be having. Is that a factor that is coming up in conversations? And what else would you be seeking to understand from people who are wanting to make either a fresh investment into India or double down on what they already have in India?
I think the one thing that really makes India stand out versus a lot of other EMs is sheer diversity of opportunities to invest in India. If you look at the listed space per se, it has a mix of everything: consumption to export to local to capex, and which is, I think, something that investors really appreciate. Most of the other EMs, barring one or two, have dependence on either a particular company or a particular industry, whereas India offers a lot more opportunity. I think, again, Jefferies as a firm, we are very bullish on India outlook. We have been strengthening our presence here. We've moved into a new office, hiring more people, building a new team, and clearly see India as one of the most profitable markets and growth markets for us as a firm.
Okay. Mahesh, you want to add to that?
Yeah, I think I would definitely say that a lot of investors that we interact with, and in fact we had a chance to meet with some of the business CEOs as well. I think the policy point that you mentioned, I think that is very important, and I would say that while the government itself, because of the fiscal constraints, might be say lowering the capex growth that the government has been putting with its own money through the budget, that number might come down. But I think over the last several years we have seen a solid foundation building by way of the GST implementation, by way of, I would say, the bankruptcy law, the private corporate leverage level is at an all-time low. The housing cycle is looking up, and with the laws like RERA getting passed, the home builders confidence is also on the rise, which is giving longevity to that cycle. So I think all these policy initiatives are clearly going to be the key driver for growth going forward, and that's what we are picking up from here in Davos as well.
Okay, great. Gentlemen, thank you so much for joining us today, and all the best for the remainder of the stay in Davos, and look forward to interact more with you on NDTV Profit.
Thank you very much, Niraj. Thanks for hosting us.
And viewers, thanks for tuning in.